we'll do, we'll post a copy of the recording on our website, which is tradingpub.com, and then marketdeal.com. We'll have a copy of the recording on both of those sites, and we'll email it out to you as well. So Steve, at this time, I'm going to go ahead and turn things over to you. You guys should see a slide up there that says Stephen Bigelow. He's got over 30 years investment experience in the market and is one of the absolute most popular presenters that we've had on the Trading Pub. He actually holds the record for one of his previous presentations being the most watched recording that we have of all time, and we've held well over 100 different traders on here and probably close to 500 or 1,000 separate sessions and recordings. So Steve, you definitely do a good job, and we really appreciate you being such a great partner and being willing to share all this great education. So I will turn it over to you.
All right, well, thank you very much, and thank you for having me back. Probably everybody's watching the recordings because of the wonderful jokes that are incorporated into the presentation. So welcome, everybody. We can tell that the weather, I'm up here in Pittsburgh right now, we can tell fall is here because it doesn't take one day after Labor Day for the fall weather to set in. So I guess the first question I need to ask is, how many people have seen the candlestick presentation before? Put a Y. If you haven't, put a no, just so I know how fast or slow to go through the, all right, so yeah, it looks like 50-50. So here's what we're going to do. I've got some slides here on the basic candlestick signals. You do not have to take any notes. This is all going to be recorded. You can look at it later. We're going to go fast. Yeah, John, that's what I had to do, is count fast. There was actually 189 no's and 172 yeses, but I got it all right. So what I'm going to do is we're going to go through this fast. Just don't worry about taking notes. Just kind of let your eyes do the shopping or the learning. I started candlestick signals. I was a stockbroker 8 years ago. I was one of the worst, not 8 years ago, for 8 years, about 30 some odd years ago. I was the worst investor in the world, and I was even a stockbroker. So I got out of the business. When candlesticks came along, it just made sense. So what we're going to do today is we're going to take a look at how high profit trades can be identified by candlestick signals with the breakouts. Just caught my eye. That's right. Anyways, what I discovered once candlesticks came along is prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and that is all that really moves prices around in the markets. And that's what candlestick analysis is the graphic depiction of what's going on in investor sentiment. So if any time you get leery or off track as far as candlesticks, you come back to one simple aspect of candlestick analysis, that the signals are the result of the accumulative knowledge of everybody buying and selling, and I'm going to use the term stock in our presentations as far as our trading entity, during any time frame. And we're going to use daily on our time frame. Let me see what this is, out of paper. During our time frames, candlestick analysis works just as well on a 1 minute chart. Is there no visual? We'll get there. Yeah, you might have to hit or come back in. So if we know what information is built into the candlestick signals based upon the 400 years of the Japanese rice traders showing us what signals work well, why they work well, and where they work well, all we have to do is learn how to use them effectively. So once we've learned how to use them effectively, now we can tell when there's going to be breakouts, breakout patterns. We're going to go real quick through the Doji rule, which is very effective. And a very high profit trade is what we call the slow curve, which is part of the breakout scenario. So in my 30 some odd years of investing, of which 25 of it now has been with candlesticks, I discovered out of the 50 or 60 signals in the universe, there's only 12 major signals that you need to learn, 6 longs and 6 shorts. So if we go back to the very basics, a candlestick signal was formed when the Japanese rice traders took the bar chart and they boxed in the open and the close. If it closed above where it opened, it created a bullish candle. If it closed below where it opened, it created a bearish candle. That does not necessarily mean the price is up or down on the day. It just shows you what happened after the open and the close. And remember, a lot of the aspects of candlestick analysis is based upon the final decision between the bulls and the bears, and that's the close. Anything trading up or down during the day, that's just noise. It's where was their final decision for the day. Again, I'm going to use the term stocks because that's what most people are oriented towards. If you're trading Forex, if you're trading the currencies straight out, all you have to do is pick a time frame, whether it's a 10-minute chart, a 30-minute chart, a daily chart. Unfortunately, a daily chart was the wrong example. An hourly chart. Just as long as you can see what the time frame is, then you can develop the candlestick signals, and they work effectively on all trading entities, whether it's stocks, commodities, futures, tulip bulbs, anything that has fear and greed in it is going to be affected or analyzed very well with candlestick analysis. So what are we looking for when we're looking for signals and patterns? We're looking for where to buy and where to sell. This was one of our recent trades not too long ago. So the illustration was, do we always get an 80% move in our trades? Definitely not. But the candlestick signals put us in situations where the probabilities of being in the right direction at the right time is extremely strong. So you see a lot of promoters say, oh yeah, we made lots of money here, we made lots of money here, and we did this with our option trading or whatever. I'm not interested in what happened there. I'm interested in what's happened here and here that told me that this was about ready to occur. So let's go through. This is going to be fast, as I say. You don't have to. Does the time frame you choose determine how you intend to hold the position? Yes. If you're a swing trader like myself, I'm using the daily charts to make my major decisions. If you're trading the E-minis, you might be using the 1 minute, 3 minute, 10-minute chart combination. If you're a long-term investor, you might be using a daily, weekly, monthly combination. I swing or I intraday trade commodities like soybeans and I need to turn this down. Swing trade. Hold on, I forgot to turn the darn phone off. Hello. Yeah. Sorry about that. If I'm trading soybeans or cattle, I'm using the 10-minute chart. And so, anyways, yes, the charts are affected by what time frame you want to trade. Then you find the charts that work effectively for those time frames. So if we're looking at the 12 major signals, remember, these are signals that the Japanese rice traders over a 400-year period have discovered, tell you when there's going to be change of an investor sentiment. I also use stochastics. Yes, we're going to get to a chart to show what all the indicators are that we use. The first signal that we do is the doji. The doji is where they open and close at the same time or same level during the day or very close to it. Doji star, the price move is big during the time frame. It's called a long-legged doji. A dragonfly doji opens at the top, trades down, closes back at the top, looks like a dragonfly. And the gravestone doji is described by the Japanese rice traders as the warriors coming out of camp, going into battle. They're beaten back into camp, and by the end of the day, they've left their dead all over the field, thus the gravestone. There's also a derivative of the doji, which is the spinning top, where you have a small body and the tails are big to the upside and the downside. But they all have one factor, is that there's indecision going on between the bulls and the bears. So there's some very simple rules that the Japanese rice traders apply to the doji. If you see a doji at the top, it's time to sell. If you see a doji at the bottom, the Japanese rice traders say you need bullish confirmation to show there's been a reversal. Otherwise, the weight of the market could continue to push the market down. You always pay heed when you see a doji because that means there's indecision going on. But here's the one that will make you tons of money. The trend will usually move in the direction of how they open the next day after a doji. So when I started, remember, I was one of the worst investors in the world. I learned a few things using the candlestick charts. Is where do most people buy? They buy exuberantly at the top. That was usually me. When everything was looking rosy, I started putting my customers in and couldn't understand why it would go the opposite direction. Where do most people sell? They panic sell at the bottom. Where do you grab for that fallen knife? That's what candlestick analysis does very simply for you, is tell you when there's been a reversal. Now, on my charts, you're going to see that we have the blue line, which is the 50-day simple moving average. The 200 is the 200 simple moving average is the red line. The gray line is the 20 simple moving average. The reason we have these on our charts is because every major money manager around the world uses those moving averages to dictate when they are buying and selling in their portfolio. I've also got kind of a pink line in here, which is the 34 exponential moving average, which is usually more useful for currency and option or commodity trading. But here's the most important one of all. This black line is what we call the T line. This is the 8 exponential moving average. And we call it the T line because it's the trigger line, because there's an extremely high correlation to, if you see a candlestick buy signal and a close above the T line, you want to stay long until you see a candlestick sell signal and a close below the T line. You want to stay short if you see a candlestick sell signal and a close below the T line until you see a candlestick buy signal and a close back up above the T line. Now, there's one caveat to that. Is the further away you move from the T line, the higher the probability you're going to come back and test it. So if we are up here in an overbought condition, exuberant buying, we see a doji, very simple rule. If they start selling it off, if they opened it lower the next day, you close out immediately. If they open it higher, you don't want to see it come back down through the trading range of the doji. It's time to sell, because that tells you the sellers are taking control. And where's the target? Most likely back down to the T line. We can always buy back. And this was always my fear, is boy, oh boy, what if I finally hit a Dell and I'm going to make a fortune on this one. And I sold out here and it just kept going on without me. Well, that's the nice thing about candlestick analysis, is it shows you exactly what's going on in investor sentiment. So now I know that if I take my profits here and it comes back down and does a J-hook pattern, which is one of our patterns we'll look at, I know I can buy right back in again. Stochastics, overbought when we're above, my stochastic settings are at 1233. We're overbought above 80. We're oversold below 20. And the very simple concept. If you see a candlestick buy signal in the oversold condition, the probabilities are they're going to start taking it up from there. All right, candlestick signals and gaps. A lot of people say stay away from the gaps. Very simple to use, not even simple to use, high profitability to use when using candlestick signals. If we know a doji in the overbought condition shows indecision and they gap it down the next day, essentially what they've told us is their decision, but they're going this way. It's time to not only be out of that position, but going short. The abandoned baby is when they gap it up at the top and they gap it back down. A one-day island reversal is one of your strongest reversals. So anytime you see a gap up in the overbought condition, it's time to start watching for a sell signal. If they gap it down from indecisive trade in an overbought condition, it's time to go short. This is not rocket science. This is just what the Japanese rice traders have shown us to be the patterns that occur time after time, day after day, decade after decade, century after century. Investor sentiment does not change. Do you review volume when determining strength of a movement? No. All volume and price movement have absolutely nothing to do with each other. Now, if I see a big volume move, let me finish this slide and go back one. If one doji means indecision, a series of dojis means greater indecision. If you see which way they take it after that, that means they're going to take it in that direction with great vigor. No, volume does not really mean anything. See if doji at the bottom. Let's see if this chart. If I happen to see on the day that we saw a doji, there was big volume, that basically tells you the weak are selling into the strong. Or up here, if you see a reversal day and big volume, that means the smart money is sold into the exuberant buying. A lot of people say, well, I want to see the volume go up as the price goes up. Price and volume has absolutely nothing to do with each other. If nobody's willing to sell stock, that price is going to go up because people are buying it and nobody's willing to sell it, and the volume may not be very big. Again, the big volume day on a reversal just tells you there's been an exchange of ownership in that stock. So doji in the oversold area, what do we want to see the next day? If they open up positive, the probabilities are extremely high that you're going to go positive. Now, another thing about candlestick analysis is through the years, I've heard people or the money managers or all the professionals say, cut your losses short and let your profits run. The problem with that is I've never seen one single one of them tell you how you cut your losses short and let your profits run. We know some very simple rules about the candlestick signals. If we see a doji in the oversold area and they open up positive, that's probably a good indication that they're now going positive. If they open up positive, where should they not go? They should not come back down through the doji. If they do, you get out of the position right away and wait for the next buy signal. Additionally, the further away you move from the T-line, the higher the probability you're going to move back up to the T-line. So the worst case scenario is if you're buying here and it gets up to the T-line and fails, at least you're coming out of a bad trade with a small profit. On the other hand, if you see it go through, you know you're in an uptrend. If you see a candlestick sell signal and a close below the T-line. Let's see, was that it? Yeah, so if you see the same scenario, if you see a doji at the bottom and a gap up, if you see a doji at the bottom after a gap down, where do most people sell? They panic sell at the bottom. What do we see? Potential reversal signal. That's time to start looking for a buy signal. A doji in the oversold area followed by a gap up is called your best friend. That tells you not only have they reversed their decision, but they've reversed their decision with great strength. This is one of the high profit patterns, is not necessarily the gap down, but a doji followed by a gap up, especially in the oversold area, you're going to make tons of money. And I keep telling people, this is not rocket science. As long as you can see, you can analyze candlestick analysis. And that's where I use the illustration of the old couple getting ready for bed. She's standing there naked in front of the mirror saying, look at me. My face is wrinkly, my breasts are sagging, my arms are skinny, my butt's scrawny, my legs are spindly. She turns around to her husband and says, is there anything you can say about my body that would make me feel good? He goes, well, your eyesight's still pretty good. So I tell people, as long as you can see, you can analyze candlestick analysis. You don't have to know formulas. You don't have to know any technical analysis. All you have to do is know what the signals are telling you. Anytime you see a doji with another combination of a signal, like a bullish engulfing signal, which we'll get to, this is called a left-right combo. Day of indecision, and then they tell you which way they're going to go. It's usually going to create a very strong price trend. And so if you use that information, especially on major support levels, again, where are most people buying? They're buying, waiting for a support level. And a lot of people, or I've had people ask me a few weeks ago, how many days does it take for your trend reversal to tell you there's been a reversal? And the answer is 0. If we see a signal and it confirms the next day, especially with the oversold condition, we're buying immediately. We don't need 3, 4, 5 days or 5, 10, 15% of a move to tell us the reversal has occurred. So that next signal, the bullish engulfing signal, is very simple. They have a downtrend. They open it below the previous day's close. They close it above the previous day's open. This candle completely engulfs this candle, this body. Not necessarily the wicks, just the body. How do you define confirmation? We'll get into that very simply. If we see a candlestick buy signal, what do we want to see? We want to see bullish confirmation. In this case, it didn't occur right away, but we started seeing an indication that if they started up, That was telling us that was the bottom. Let me see if I can get, here's a left-right combo. There's the doji, bullish engulfing signal. Where did it close? Right on the T-line. What makes it even better is, what do we know about the T-line? We know that if we see a candlestick buy signal and a close above the T-line, we're going to be in a strong uptrend until we see a candlestick sell signal and a close back below the T-line. So if we see a left-right combo that closes right on the T-line and it opened positive the next day, that's immediately telling us the T-line's not acting as resistance anymore. We'll probably want to be buying aggressively. Number one, because stochastics are coming up. It's confirming the bullish signal. It's telling us the T-line is not acting as resistance. And it's also telling us this little downtrend is not there anymore. We want to be buying. Where would we close, or where would we stop out of this position? If this was the signal that told me the bulls were in control, they shouldn't close at more than halfway down that candle. The T-line, as in Thomas. T-line is the 8 exponential moving average. If you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close below the T-line. T-line, yep, there you go, T-line, thank you. Opposite of the bullish engulfing is the bearish engulfing. Opens above the previous day's close, closes below the previous day's open. This black body completely engulfs the previous day's white body. And a very simple rule about candlestick analysis. The bigger the signal, the more compelling your reversal has occurred in investor sentiment. There's your kind of your left-right combo, a close below the T-line, starts indicating you're going to be in a downtrend. Next signal is your hammer signal. There is one formula that you have to know in candlestick analysis, and that's the number 2. In most of the signals, or some of the signals, like a hammer, the tail should be 2 times greater than the body. Here at the end of the downtrend, you see them hammer out the bottom, come back up. The body can either be black or white, or dark or white, just as long as the tail is 2 times greater than the body. This essentially tells you the bears tried to hammer out the bottom, the bulls step back in. What's our confirmation? We want to see the bulls are still there the next day. That's the time to start buying. And if you see it occur, this is the advantage of the visual capabilities of candlestick analysis. We can see exactly what the investor sentiment was at a major support level, like the 200-day moving average. What do we want to see the next day? Bullish confirmation. That's when we can be buying. Where's our stop? Shouldn't close back below the hammer, the head of the hammer. Or what do we want to see for confirmation? Not only was there a potential reversal, but the next day they gapped it up off the support. That tells you exactly what the investor sentiment was. Is there a scan? Yes, there is a scan. There's a scan for all of this. We'll get to that. The opposite of the hammer is the hanging man, an uptrend. And there's his head and there's his legs dangling down. A hammer or a hanging man is the prelude to the sellers taking control. The bulls are happy, the bulls are happy, the bulls are happy, and then all of a sudden the bulls are a little bit nervous. The bears are starting to come in, but by the end of the day they're relieved. They say, shoot, that was a close one. Next day they open it lower, the bulls say, shoot, the bears are right back here again. Get me out of this trade. It's time to get out of the trade. Piercing signal. A little bit different than a bullish engulfing in the sense that it not only opens below the previous day's close, but it gaps down below any of the previous trading day. And then again, that number 2, it closes more than halfway up this candle, basically telling you that the bulls have started taking control. Now, this is where the visual capabilities also help you. Where is this happening? Right smack dab at the same spot that it happened before. So this gives you a much quicker analysis to say, all right, we're in a double bottom. All I need to do is see confirmation the next day. I can start buying. The opposite of the piercing is what we call the dark cloud, where they gap it up above the previous day's trading and close more than halfway down this candle. So this is the nice thing about candlestick analysis also. Where does the exuberant buying come in? Usually in the overbought condition at the top. So very simple rules. If it gaps open and starts trading higher, you just put your sell stop. If there's something good happening, it's going to keep going. If this is exhaustion up here, you put your sell stop one tick below where it opened, because if it comes back down through there, it's going to create some sort of sell signal. A dark cloud, a doji, a shooting star, a bearish engulfing signal. If it gapped up in an overbought condition, start watching for a sell signal. Will this be taped and sent out for more relaxed notes? Yes, it will. Yeah, don't try to take notes right now. We'll go too fast, and I talk too fast, and sometimes I slobber and slur, and you won't even understand what I'm saying. Also, notice how far away we were from the T-line. If we can start seeing that we're moving away from the T-line by a good distance, it's time to start looking for a profit taking, because where are they going to bring it back to? At least back to the T-line, maybe further. Why take the risk? Once you see a sell signal setting up, close out the position. The bigger the signal, the higher the probability that you're going to be heading in a downward direction. All right. I'll try not to slur and slobber too much. What else we got here? All right, the shooting star. Looks like a shooting star. Again, a tail 2 times greater than the body. Looks like a shooting star coming out of the sky. And again, notice how far away we are from the T-line. So you see a shooting star getting up close to the overbought condition. Again, there's that volume. When you start seeing volume getting big up here, that means there's a lot of people exchanging hands or selling into the exuberant. If they open it lower the next day, you close out the position immediately. Where is it probably going to? Back to test the T-line. Is it going to support there and head back up? You'll see signals that tell you that. Well, why take the risk up here? Let it come down here, because for all we know, it's going to continue right on down. Shooting star in the overbought condition. They gap it down. Not only do you want to be out of the position, but you want to start shorting. Any candlestick signal and a gap followed by a gap is going to be a high profit trade for you. The inverted hammer is also like the hanging man. It's kind of the reverse psychology. The bears are happy, the bears are happy, the bears are happy. And then all of a sudden the bulls step in and the bears get nervous. The next day they take it back down and close it right where they opened, kind of a inverted hammer gravestone doji. The bulls or the bears say, shoot, that made me nervous. The next day they open up positive. The bears are saying, get me out of the way. They start covering, and that starts the uptrend. Now, there's nothing quantified on this other than the fact that in my experience over the last 25 years, there's probably a 95% probability or greater that if you see an inverted hammer close to the oversold area and they open up positive the next day, you're going to go positive. This is not one of the, this is probably the least, what I want to say, least often seen of the 12 major signals, but it's probably one of the most effective for telling you which way to go. Same scenario though, if this was an inverted hammer and we know the probabilities are strong that it should go positive, where should it not go? It should not come back down here below where the inverted hammer started. If it does, it hasn't worked, get right back out of the trade. Let's see, where are we? All right, I better start zinging through some of these or we're going to be here right through dinner time. Inverted hammer, Harami, oversold area. They open up positive the next day. You want to be buying. The probabilities are extremely strong. You're going to be in an uptrend. Bullish Harami. Harami in Japanese means pregnant woman. There's her body. There's her little belly sticking out. It basically tells you the selling has stopped. And this becomes very effective, especially on a support level. What do we want to see down here? We visually want to see what the happening between the bulls and the bears and whether everybody's starting to buy at a major support level. Bullish Harami followed by positive trading the next day, time to be buying. And it also acts as a barometer. The higher they close this Harami in the previous day's trading, the stronger the trajectory will be coming out the other side. If this had opened low and did a little small Harami the next day, your trajectory may have been more like this. Bearish Harami, the opposite. means this buying has stopped. What are we looking for the next day? Lower trading. Especially if we're up here in the overbought condition and we've moved away from the T-line, you start looking for sell signals. If you see a bearish Harami followed by a gap down, that not only tells you the buying has stopped, but they're trying to get out of this trade with great enthusiasm. That's time not only to be out of a position. If I saw a bullish or bearish Harami up here in the overbought condition, I'm closing out at least half the position, if not the full position. If it gaps down the next day, I want to be ready to go short. The Morningstar signal is a 3-day pattern, a down day and a downtrend, a big down day, a day of indecision, and the third day closes more than halfway up this candle. A very symmetrical pattern, just a down day, a day of indecision, bullish confirmation the next day, closing more than halfway up this candle. It's time to be buying. These work, most of these, I say most of these trades, the trades work most effectively when the stochastics are in the overbought or oversold condition. They still work even during a trend, but not as with as much force. The first day, yes, the first day on a Harami is going to be the opposite color of the second day. And so here we have the Harami, or bottom, let's say, big down day at the end of a downtrend. A doji, again, if we see a doji followed by a gap up the next day, that's your best friend. And if that third day closes well above the halfway point of this candle, that just means that's more strength going to come into the next price trend. Happens right at the 50. Doji, anytime I see a doji in the oversold area, I start watching for a buy signal. They are affected with the tick chart too, but I don't use the tick chart. I got enough information right here on these charts to tell me which way things are going. And so this was an example of, if you see a Morningstar signal, it's working. It also tells you when it doesn't work. If this is a Morningstar signal, what should it be telling us? We should see a close above the T-line. Well, the next day it didn't close above the T-line. If we happen to have jumped the gun and bought right here, the next day they did a doji. Still didn't confirm. Third day, they're starting to trade more than halfway down the candle that told us the bulls were in control. It better be pretty well assumed the bulls aren't there. Get out of the trade and go on to something else. Probably 1/3 of the trades that I make are failures, but they're failures to the point where I know that when in my old days or before candlesticks came along, when I put money into a position, it was because I was smarter than everybody else and I knew there was time to go up. If it didn't go up, it was because people that weren't as smart as me didn't see the reason for it to be going up yet. Now I know that every trade that I make, probably 1/3 of them aren't going to work. I'm not worried about that anymore. It doesn't cloud my mental trading. I know that if they don't work, I'll see it in the chart and get right back out of the trade. This chart is the Dow from a while ago, and this is what what we can see with the candlestick signals. Is we had an uptrend, it broke the 50-day moving average, came back up, failed at the 50-day moving average, went right down here. Now we're in the oversold area, and we see a huge doji hammer signal. They'll be the recording effective or out to everybody tomorrow. If we see this, what do we know if we'll confirm a doji hammer type signal, especially on a major support level? Well, if we wake up the next day, we don't have to wait to see whether they're buying. If we wake up and the pre-market futures are positive, we're buying immediately. And then we're making money for the rest of the day and the rest of the trend. Now, I also go back and use this chart to say, my late friend Dave Elliott of Wall Street Teachers called this pattern a blue ice failure, where somebody fell through the ice, they came back up trying to find the hole that they fell through, they fail, which means they drowned. Where are they going? They're going to the bottom of the pond. That's called a blue ice failure. Now, I always would aggravate him by kind of amplifying the I don't know how to turn the sound down on this. By asking people, how do you catch a polar bear? You cut a big hole in the ice and you take a can of peas and you can't spread that can of peas around the edge of the hole. And then when a polar bear comes down to take a pee, you kick him in the ice hole. Anyways, so from here we saw a morning star signal. Where's our next target? More than likely back up to the 50-day moving average. They fail at the 50-day moving average. Where are they probably going to? Back to the 200. However, what do we see in here? We see a morning star signal that tells us they probably supported at this level. Now, this is another reason why we use the T-line, because now it's closed back up above the T-line. We have a T-line crunch. Notice how they couldn't close below the T-line or even trade below the T-line, and they push it back up to the resistance level. A little bit doubtful here. It could either open lower and take us back down, but if we see that they're opening with the pre-market futures are positive the next day, we know immediately they're going through this level. We're buying on the open. We don't have to wait into the day to see how whether it's going to work or not. I only use candlestick charting. I would assume this method works exactly the same. I only use candlestick charting. Well, this is kind of candlestick charting. I don't know how much time we have here. A lot of people have candlestick charts on their computer. They just don't know how to use them. And I kind of illustrate that with the story of the young Indian that left the reservation, went to Harvard, graduated top of his class, went to Wall Street, was making millions of bucks. And then his tribe called him back and said, we want you to be chief of the tribe. So his heritage was much stronger than his will to make money. First day back at the reservation, he's in his teepee, and all the elders came in and said, how much wood should we collect for the winter? And he had no idea. He said, come back in an hour, I'll give you the answer. They all filed out. He flipped open his cell phone, called the local weather stations and said, what do your computer indicators look like for the winter? And they said, oh, it looks pretty much like it was last year. So he called everybody back in and he goes, collect the same amount of wood as last year, but collect 2 more weeks worth of wood just to be safe. So they all did. A few days later, he called up the weather station and said, everything still looked good? The weather guy said, no, looks like it's going to be a little bit colder than what we thought. He goes, oh, man. He calls everybody back in and says, hey, go out and collect another 2 weeks worth of wood. And they started grumbling, but they did it. A few days later, he flipped open his cell phone and said, everything still look all right for the winter? And the guy said, no, it's going to be a little bit colder yet. And he goes, oh, man. So he called everybody back in and said, you better get 2 more weeks worth of wood. So they all started grumbling and complaining like you all probably are sitting here listening to this story. And so they went out and got 2 more weeks worth of wood and called the weather station a few days later, and he said, no, it's going to be a little bit colder. And he goes, oh, man. He called everybody back in and said, hey, go out and get 6 weeks worth of wood so we can get this over with. So they all did. They were pretty mad. After that, he called up the weather station and said, now what's it look like? And he goes, oh, man, we're going to have one of the worst winters that we've ever had. And he said, what the heck is wrong with your computer indicators that you can't get things right? And he goes, oh, we don't use computer indicators. We watch the Indians. The more wood they collect, the colder the winter is going to be. So that was all to illustrate that if you don't know what your charts are telling you, they don't do you any good. So anyways, we're looking for candlestick buy signals. There's your morning star signal away from the T-line. Stochastics in the oversold area, opens positive the next day. At least we know our first resistance to watch for is to see what it's going to do with the T-line. If it goes through, we know we've got a strong price move. If we get a strong price move, now we can start seeing when to take profits and when to get back into the trade. There's what we call a J-hook pattern, is when they start bringing it back indecisively and taking it back up for the next wave. The evening star signal is an up day, an uptrend, a day of indecision, and then the third day closes more than halfway down that candle. up day, shooting star, bearish candle, closing below the T line. It's time to go short until we see a bullish Harami, and it's time to go long. This is the strongest of all the signals. The kicker signal. You're in a downtrend. The next day, or the last day, they open it here, close it here. The next day, they gap it open at or above the previous day's open and go the opposite direction. Or you have an uptrend, and this is usually me. Everything's going up, nice big day. The next day, they gap it down below the previous day's open and start going the opposite direction. When I'm usually holding a position, I'm thinking, oh man, they're gapping it down. Maybe they'll take it up one more time so I can get out and then take it down. I've learned if you're in an uptrend and they gap down below the previous day's open, there's only one thing you want to do is get out of the trade right away. But the force of a kicker signal means there's been a definite change of an investor sentiment. It's usually going to be followed by a very strong price move after that. The bigger this gap up, the higher the probability the change is going to be strong for quite a while. So you shouldn't really see a tail to the downside. The stronger bullish candlestick or kicker signal is going to be without a tail. It opens immediately and starts trading positive. But even if it has a little tail, and they opened here and closed here, then gapped it up and went this way, it tells you there's been a change of investor sentiment. Or if they gap it down below the previous day's open, the first thing you want to do is close out the position and then see if it's time to go short. Do you have the most current candlestick PDFs at your site? Yes. Our site, thecandlestickforum.com, we've got, I think, about 1,300 pages of free information on how to use candlestick signals effectively. You mentioned following direction of pre-market futures. How often are these misleading head fakes? Probably less than 5% of the time. And it doesn't really matter all that much. No, I shouldn't say that. If you're in an oversold condition and the next day we're seeing the pre-market futures strong and we're starting to see buy signals, yes, that tells you something. All right, so trading gaps, very effective. Doji gap up is your best friend. That's where you're going to get high profit trades. Anytime I see a doji followed by a gap up, there's usually going to be a strong price move. So if you know what each individual signal has built into it as far as investor sentiment, you can now see what a series of those signals do. Fry pan bottoms, dumpling tops, what we're basically looking for. This is our J-hook pattern setup that shows us there was a breakout, pulls back, does a little Morningstar signal, J-hook. Do we always catch positions where we're in at 15 one day and out 3 days later at 45? Not always, but it allows us to identify when those things are setting up so that we have the opportunity to be in those trades. So we're watching for those big move setups, whether it's a J-hook pattern. We know a J-hook pattern is a strong price move. Then there's indecisive trading. Notice there was doji, spinning top, came right back to the T-line, started back up. Very simple. If you're an option trader, we know that the magnitude of wave 1 and the magnitude of wave 3 are going to be about the same. Very easy strategies for putting on spreads because you know what your top side target is going to be. Fry pan bottom is a slow rounding curve. We just went through a whole session saying you're looking for buy signals in the oversold area. Different with a fry pan bottom or any of the patterns. Where do most people buy? They buy exuberantly at the top. So your stochastics are usually going to be up in the overbought area on a breakout situation. If they break this out, that tells us coming out of this fry pan bottom, there's going to be a very strong price move after that. Very simple rules. The further away you move from the T-line, the higher the probability it's going to bring you back. So candlestick analysis is nothing more than putting common sense into visual practice. Here is the T-line that helps us maintain, keeps us from being whipsawed. A buy signal and a close above the T-line, you stay in it until you see a close back below the T-line. Notice what this did. This pulled right back to the 50. We did a bullish engulfing, close above the T-line. It was time to get right back in. The Japanese rice traders say, let the market tell you what the market is doing. This one was telling us as long as it stayed above the T-line, you stayed in it. We made big profits on the second run. We're not stock pickers. We're just trying to find out the simple price patterns that have basic candlestick truisms in it, that if you see a series of dojis and they start selling it off, it tells you one thing. It's time to, that a series of dojis is greater indecision. If we see support and resistance areas, we can see immediately what's going on at those areas for breakout situations. Or a resistance level, where's the big breakout area? And if we know what the pattern was prior to that, here we've got a kicker signal that broke through this downtrending channel, as well as the 50 and the 200. We're in an uptrend. We know a kicker signal is going to keep us in an uptrend until we see a sell signal and a close below the T line. A doji gap up is our best friend, especially when it's breaking through downtrending channels. This gap up tells you there's a lot of force after that indecision. So the breakout areas are pretty simple. Where can you see a resistance level? If we are buying based upon candlestick pattern breakouts and breaking out through resistance levels, we've got high probabilities that we're going to be in the right trade at the right time. This slow rounding curve fry pan bottom started right about here. That's where we're looking for a breakout. If it breaks out, we know that's enthusiasm that has been building up. This is investor sentiment. As you can see, you couldn't trade this worth a hill of beans this whole time. There wasn't ups, there wasn't downs. It was just crummy, indecisive trading days until they gapped it out the other side and gave you a very strong price move. How far away from the T-line is too far? You don't know. Very simple. If I was owning this, which I did, when they started gapping this up, what do we want to start looking for? Sell signals. They gapped it up here. Where's my buy or sell stop? Down here. They gapped it up again. Where's my sell stop? Right here. They shouldn't be able to bring it back down through there. Notice how far away we were from the T-line. This is just human nature. They're going to bring it back to levels that the T-line is probably, not very many people use the T-line on their charts. So what it boils down to is the T-line is somewhat like a Fibonacci number, where it's a natural number. And so it seems like the further away they move away from that natural number, the more apt they're going to bring it back down and test it. Anytime I see this breakout, again, stochastics in the overbought area, normally I'm not buying a stock that has a big price move in the overbought area, because that's where the enthusiasm's coming in. That's time to take profits. Except if I can visually see this is a breakout of a fry pan bottom, I know what the results will be. A strong price move, and this is what we call the classic, a strong price move coming out of the fry pan bottom, a J-hook pattern, which tells us we're in our next leg up of that trend. We're looking for where is the breakout. Notice we had a nice bullish signal here, stayed above the T-line, broke out. Essentially, this is a J-hook pattern. All we're looking for is the patterns of human nature that tell us that we've still got a high probability trade going in our favor. So those factors for a strong breakout is, what is the market direction doing? Obviously, you're going to get better bullish breakouts in a market that's not cratering. What are the condition of the stochastics? Where are the stochastics in the trading entity? Is there an obvious resistance level? And what signals have brought the prices toward the breakout area, or what patterns have brought the prices toward a breakout area? So here's what we call our belt hold and our doji sandwich rule. You got a belt hold signal, which is where they gap it way down below the trading range and bring it back up into the trading range, which essentially means they've stopped up all the sellers. A doji, we have a simple rule of a doji. It's going to move in the direction of how they open it after a doji. It opens positive. Our doji sandwich is a very simple pattern. This candle right here is usually going to be the same magnitude as this candle right here. This is very effective whether you're trading off the 10-minute chart, the 1-minute chart, or the daily chart. If you're a day trader, it makes for a very simple day trade setup. We're looking for that breakout. There's a left-right combo with a gap up through the resistance. That tells me there's a change of investor sentiment. left-right combo or a bullish engulfing after a hammer signal off the 50. They gap it up through this resistance level, kind of a scoop pattern, which is one of the major patterns. Yes, there's a formula for the gaps. There's a formula for all of this. The scans are very simple. So these patterns work as well on the daily chart as they do on the Dow 1-minute chart. Where does it usually fail? We can see immediately that the first time it came up to the 200 on the 1-minute chart, it failed with a shooting star. Where did it support? Right on our T line. Where did it break out? When it came up through the 200 the second time, with the T line pushing everything right up through that level. Downtrending channel, bullish left-right combo, breaking out. When they break out of these downward channels, that means there's a lot of force pushing it to the upside. The slow curve is something that we make tons of money with. Slow curve is a kind of a smaller fry pan bottom, but it usually occurs in an uptrend. An uptrend, they pull back, indecisive, starts coming back up. Where are they breaking out? Right here. This is the buy point. This is the buy point whether you're buying stocks, currencies, or you're getting ready to trade option trades. If you want your timing on an option trade, this is the spot to be buying options. Made tons of money looking for this type of setup and then looking for a breakout the next day. Because once they break out, it's usually a big pop because everybody's seen whether this is a resistance level is going to act as a resistance. When they see it's not, they all start rushing in. Slow curve breakout. This is the result we're expecting. If the slow curve breakout doesn't occur, comes back down, you get right back out of the trade. But the risk reward factor, especially if you're trading options, is if this pops, your options are going to explode very rapidly. Breakout, strong price move. Breakout, strong price move. This is what we call a double doji. They take it up, they do a doji. The next day they consolidate again, doing a doji. Third day, they open up positive, telling us that they're going to move in that direction, at least with the same magnitude as that day right there. Plus, if they were moving the same magnitude as that day right there, what's that tell us about the resistance level? The resistance level is not going to remain a resistance level. That's where everybody's going to start piling in. This is what we call the flutter kicker signal. I think I got the right one. Now let's go to this one. Now, here's a flutter kicker signal. Down day. The next day they open it up above. They gap it above the previous day's open and do a doji. That's not very decisive. But what happens on a kicker signal day? Kicker signal day, if they go positive, you're rushing around trying to find money to get in there. On a doji, gap up, makes it very simple. You can find the money the next morning. If they open it positive, they're going positive. Because if you took this doji out of here, you essentially have a kicker signal, which is our strongest signal. Down day, gap it up, then go positive. If you took this doji out, you have a flutter kicker signal. If you took the doji out, you have a kicker signal. Very strong price move. Here's the doji sandwich. Bullish day, doji. They open up positive after a doji. That tells us they're going positive, and they do it above this level. That tells us they've broken out through this level. This is, again, not rocket science. This is just knowing what should happen after signals. Double doji, open positive, you want to be buying immediately. Tells you what they've done after that indecisive pullback. I'm not ignoring your questions, trying to get through so you at least get the meat of all this. I'll be glad to stay as long as we need to answer questions. There's a fry pan bottom breakout, strong price move. Goes dead, has a slow curve. There's your doji right on the resistance level. Makes it very simple. If it opens positive, they aren't resisting anymore because they're going to move in the direction how they open it after the doji. Gives you another good quick trade. So the breakouts basically occur when you can see there's a doji gap up through the resistance level. We're ready. If we didn't buy it on this day, we're ready to buy on positive trading. However, next day they open it lower and trade it down. That doesn't do us any good. All we have to do is put a buy stop here. If they come back up, that tells us the profit taking's over and the bulls are still there. This is where we make our big money, is looking for the breakout, knowing what the candlestick signals are telling us. Notice what we had here, a big profit-taking day. Stochastics weren't in the overbought area yet. All we want to do is see them open a positive and trade positive. That tells us the profit-taking is over. The trend is still in progress. We're looking for these type of breakouts. So not only does candlestick signals give you very effective analysis of what the overall market is doing. For example, this was today's trading. Notice that once we had hanging man signals and it closed below the T line, we were in a downtrend until we see a candlestick buy signal and a close above the T line. How did we know this was starting to bottom in here? Because we saw flat indecisive trading, which is now our cradle pattern, which is a very simple pattern. Big down day, flat trading, usually dojis, and then this day comes back up. That's part of the cradle. That's the headboard. That's the bed. This is the footboard, hanging down usually between two trends. This, you can draw a trend channel above the tops and the bottoms of the Dow. We had a doji day today. What do we do tomorrow if we see it open positive? You know, we're probably going to have a doji sandwich. It means another big day, the same magnitude as that day, confirming our cradle pattern, confirming the direction of how it's moving after a doji, and showing us that the T-line's not acting as resistance anymore. It's now going to be support. Our next target is probably up here to the 50-day moving average. Not rocket science. Very simple. Tomorrow the market's going to move in the direction of how they open it after a doji. But if they open up positive, we know we're going to probably have another big day. So when you know the direction, that allows you to set up. This was our RMTI. We were trading in our chat room today because notice what we had, a fry pan bottom. It pulled back, kind of a little J-hook pattern. Did a doji gap up yesterday. Remember, a gap up is a good, strong sign, especially if your stochastics are coming up. If they opened up positive, what's that tell us? It tells us they're going to move positive after a doji. If they move positive, what's that telling us? They're breaking out through this level. Do we always get a 33% move and a price move each day? Absolutely not, but it puts us in positions where the probabilities of being in the right trade at the right time are greatly in our favor. We also started buying HMX. Notice the slow curve here, kind of a scoop type pattern. They gapped it up yesterday, broke out through here, gapped it up again today. We're in this one with the anticipation we're in an uptrend until we see a sell signal. See what else we got here. We bought this a few days ago. A gap up out of the resistance level. Prices move in waves. We know we had, coming out of a fry pan bottom, we had a strong price move, wave one. Wave two, sideways, right to the 50-day moving average. Wave three, where's this going? You could probably take this projection right here. If they catch up to this, then they'll go up 45 degrees. Again, we're just trading what human nature does time after time. This is what we call the classic. We started buying RPTP on the breakout. There's a left-right combo at the breakout level. Strong price move, pulls back, did a belt hold signal, which told us on the pullback, they've now wiped out all the sellers. We're heading back up. Here's wave one. Here's wave three. This is what we call the classic. Fry pan bottom, strong price move, J-hook pattern afterwards. So anytime we can analyze the common sense breakouts with signals, notice that we have a flutter kicker here, which is a very strong signal that broke out through this downtrending channel. It also broke through the 50, trading positive today. If this is wave one, wave three is going to take us way up here someplace. So that's, again, the advantage of candlestick analysis is that you don't have to overanalyze. And I usually tell the story about the lady that brings in her parakeet, lays it down on the vet's table, and the vet says, "Ma'am, I'm sorry, but your parakeet's dead." And she goes, "Oh, isn't there something you could do? He's been my best friend for years." And he goes, "Well, let me look." He goes back to the back of his clinic, brings in a big cat, lays the cat next to the parakeet on the table. The cat sniffs it, looks up at the vet, shakes his head. He goes, "Ma'am, I'm sorry, but your parakeet's dead." He goes, oh man, he's been my best friend. Are you sure? Can't you do something just to make sure? And he goes, all right, goes out to the back of his clinic, brings in a great big Labrador retriever, comes bounding in, puts his paws up on the table, sniffs the bird, looks up at the vet, shakes his head, goes, ma'am, I'm sorry, but your parakeet's dead. She goes, oh no. They go out to the front desk, and he says, okay, well, that'll be $250. She says, you're charging me $250 to tell me my parakeet's dead? And he goes, no, ma'am, I would have done that for 18 bucks. Then he wanted a CAT scan and a lab report after that. So I tell people, you don't have to overanalyze candlestick signals. It's all just common sense, graphic depiction telling us what's going on in investor sentiment. You mentioned gaps frequently. There aren't as many. Yeah, they're not going to be in Forex, and they're not going to be occurring in an intraday chart as much, if at all. What is your favorite intraday time frame? Well, let me finish this up and just tell you what we do for the Trader Pub group is we give you an offer you can't refuse. For 15 buckaroos, we give you our star 5-star program, which tells you how to use the candlestick signals, your entry and exit strategies, how you use stop losses effectively using candlestick signals, how to use the gaps effectively. Did I say entry and exit? This package is usually worth $540. That's what we sell it for on Amazon and our website. But for 15 bucks, you get that package so that you can start learning candlestick signals. But wait, there's more. You also get 30 days free trial to our website, which again has 1,300 pages of candlestick analysis on there. It's got all the formulas. It's got the scanning techniques. And each day we have a chat room that's open all day long where we've got approximately 200, 250 traders in there where if you've got questions or if you're looking for good trades, you've got that many pairs of eyes out there all looking for the same thing. They were the ones in the chat room that came up with trades like this and trades like this. Everybody is out there trying to identify the same patterns. So there's the link. Morgan just put on the link for the special. And so each day we've got the chat room open. Monday nights I do sessions for members only. On Thursday nights we do special sessions. As a matter of fact, tonight we're doing a special session on how to use the 3T line, which is a much faster technique than just the T line. And on top of that, instead of you having to buy all the, CDs, we got CDs on the entries, exits, on the 12 major signals, on the major patterns. We do training sessions about 2-3 times a month where instead of, we usually charge somewhere between 95 and 100 or $200 for a training session. For members, that's all free, and that's going to be where we go through live on how to use effective entry strategies, or how you set up your stop losses effectively, or how do you scan. I can scan for the best 2 or 3 trades the next day out of the 7,800 trading entities out there in less than 20 minutes each afternoon, narrowing it down to which ones are the best trades. So all this, you get 5, you get on the CDs, you're going to get how to use the moving averages and support and resistance, how to identify or how to improve your entry strategies to keep you out of bad trades, how to set up your stop losses, how to use the gaps effectively. Again, the gaps are your best friends with candlestick analysis. Will there be a postage charge? No, this is all downloadable. Once you sign up on the special, let me see if I can stick the special in here too. I guess not. Let's see. I usually goof this up strategically. All right. Yeah, that's all. Again, you're going to get well more than your money's worth. What we're really trying to do is just get people exposed to candlestick analysis. There's so much misinformation out there on the internet about candlesticks. For 15 bucks, which is the cost of 2 Starbucks coffees, you'll get a ton of information that will either allow you to say, and I usually put it this way: no matter what trading method or who you're following, if you overlay candlesticks on your charts, it's going to make you see a much more clearly whatever you're doing. Michael, if you email Abraham at Candlestick Analysis and tell him that you came in through the Trading Pub presentation, he'll get you set up. All right, so I know there's a bunch of questions that I missed out there. Oh, okay. Thank you, Edward. After 30 days, again, we're not trying to trick people into becoming Candlestick members. After 30 days, you're going to get a notice saying, we'd like to keep you as a member, or would you like to stay as a member? It's usually $97 a month after that. Or click here and you're canceled off. We're not trying to trap people into becoming members of Candlestick Forum. We're just looking for people that once they try it for 30 days and think it's going to be effective for them, that they want to stay on. So how is this different from the 12 candlestick videos for 12 bucks? That the 12 major signals that you got, Bill, was strictly the 12 major signals. This is more of the mechanics of how to use those signals effectively for, again, entry, exit, stop losses, using the gaps, the moving averages, and I think even the scanning for the best trades. Okay, let's see. All right, so are there any other questions? Do you differ? Rami, yes, we differ quite a bit. My whole orientation is what is going to make me money. I'm an actual trader using this, but I tell people I don't like to criticize anybody else until I've walked a mile in their shoes for 2 reasons. One, if I piss them off, I've got a mile head start, and 2, I've got their shoes. What is the cost if you want actual CD post to you? Oh, I don't know, Kenny. You'll have to email Abraham at candlestickforum.com. What's my favorite when I'm trading soybeans or cattle or the dollar or the Japanese yen? I use the 10-minute chart. When the 10-minute chart looks like it's setting up, then I'll flip down to the 5-minute chart to see if the 5-minute chart is confirming my 10-minute chart. And if it looks like everything's setting up, then I go to the 1-minute chart to see if that's the actual time to be doing it. You just download the, everything's downloadable. Once you order, you get a button and it shows you how to download everything so you get it instantly. Yes, this does apply to Forex. Basically, what you have to do is find the time frame that you want to use, obviously with it being a continuous trading. But it works just as effectively for Forex as it does tulip bulbs or bonds or anything else. Where do you get the chart to display candlestick like best? Where do you get the chart to display candlestick like best or an affordable broker? Alta, that is something that you use the candlestick or chat room each day to ask those very questions. That way, because I've got my setup that I've been using for years, which may or may not be the best anymore. So there's tons of people out there that can give you their opinion on what charting techniques or charting services they're using and or what brokerage firms they're using. Oh, Iman, that's something that I always say that out of all the trades in the world, probably 90% of them are based on fundamental analysis, which means 10% of all trades are done based on a technical analysis. And I bet you right now about 1/10 of 1/10 of 1/10 of 1/10 of 1% are people using candlestick signals. So we could teach 100,000 people how to use candlestick analysis and it still wouldn't put a wrinkle in any of the markets. Candlesticks work well for option trades, definitely. I trade options all the time. Because basically, every time I see a candlestick chart, I know the probabilities are in my favor, that I'm going to try to leverage it as much as possible. How do you obtain the 5-star plan deal? Just click on this link right here, right what Morgan's putting up, and that will get you there. Is this for intraday or end of day trading? It depends on what charting services you do. I have got live charts where I'm trading off the charts during the day. If you're not an active trader, if on my stock trading is based on swing trades, which means my trades are somewhere between 2 and 10 trading days. You can use an end of day service for that. Slow stochastics. Again, the stochastics are only to tell you where you are in the trend. Some people say, well, do you trade where the stochastics cross? No, that's a crossing stochastics trading platform. What we want to do is see what candlestick signals are occurring, and we would like to see candlestick buy signals in oversold conditions. The Warden TC2000 is good. I've just written the formulas for Metastock for finding high profit trades for their system. You have a course that is specific to stock trading options. Yes, we've got videos for option trading, and we also do option trading strategies. Usually at least once every 2 or 3 weeks, we'll have an option trading session in the chat room. Let's see. What do you think is the best Forex trading platform? David, I don't know, because I don't trade Forex. I usually trade the currencies outright because I can easily identify what's going on in the direction of the the dollar, or the Japanese yen, or the British pound, whatever I want to trade. I don't trade the combinations. Yes, this is recorded. I do E-minis, lot setups, intraday, 1 minute, 3 minute, 15. Yeah, David, when I traded E-minis, I used the 1 minute, 3 minute, 10 minute chart combination. Okay, thank you, Sam. I think there's a technical problem. Nor just email Abraham at candlestickforum.com. He'll get you straightened out. Just tell him that you were trying to get in through the Trader Pub special. Yeah, once you download it onto your computer, DiePack, it's yours. Let's see, what numbers do you use for your stochastics? 12, 3, 3. And again, that's only because over the last 25 years, I just tweaked it, and they seem to be the best to work for the type of trading I do. Did you work on TOS? No, Michael, I was working with Tom Saznoff. We were getting set up at the time that he sold out to Ameritrade, and the Ameritrade attorneys just stopped everything and never started it back up. So I think some of my people in our trading room have put different formulas that I show them out onto TOS for some of the searches. Tom, we've got some CDs on our website that show you how to set everything up using TCNet. Thank you, KM. Yes, tonight will be recorded, but it's going to be usually they're available, but for some reason, Pat, my marketing person, is just using it for people that are overseas that couldn't get there. David, that's why I tell people probably watch the videos just to listen to the jokes. Yes, once if you decide to stay on as a member, it just becomes an automatic debit. And you can set up your debit to be on a quarterly basis, or which is cheaper, $241 for the quarter. Or I think they even have a special where you can sign up for our normal annual fee is $907, but I think through this program you can get it for $580. Kent, immediately email Abraham. It should be coming to you somewhere. There's a link. Brokerage is more important than platform. Yes, but that's all part of the playing field. What is the setting for the 8 EMA? The 8 EMA. Just like setting up any other moving average. Just instead of being a simple moving average, it's exponential. Thanks, Edward. TradeStation is okay. I think they've got some of our formulas over on TradeStation. Ed, I don't know whether you get a receipt. Again, that is where if you need one, yeah, something should be coming back that shows that you've paid. When you use a 3 EMA, when you have a price movement, it is fast and hard, and you've moved away from the T line, now the 3T becomes very effective for telling you when to start watching for a sell signal. What brokers do you have scans with? I'm pretty sure all the scans are over at TCNet. The scans are at Metastock, Ninja Trader. As far as the brokerage firms, I'm pretty sure a lot of my information is at Thinkorswim, TradeStation. I'm not sure about some of the others. I know we are going to be doing a full-scale program this month with I think TradeStation wanted us to get things set up on a full scale. Okay. Yeah, if I've sloughed over anything, if you need questions answered, let's see. Abraham. At candlestickforum.com. Yeah, as you can see, the price isn't anything that all we're trying to do is get people exposed to the candlestick trading. If you overlay it on your charts and you're using whatever techniques, whether you're trading off of Fibonacci's, moving averages, anything that you're using, if you put candlesticks on there, it's going to be that much better. So with that, Morgan, thank you again for the invite. And hopefully we'll see you all in the chat rooms. RSI, yes, you just apply the nice thing about candlesticks is the first thing we know about candlesticks is that they work, or they wouldn't be around after 400 years. So once you become accustomed to candlesticks and gain confidence in the fact that they work, or gain experience to where you're using them effectively, now you can start putting your own indicators on there, whether you want to try RSI or anything else, you can just add it and tweak it, knowing that you're not changing the underlying method. You're just trying to tweak it to make it better. The high profit candlestick patterns would be the first one, Leslie. That tells you, that's the green cover book, and that tells you the high profit patterns and signals, and kind of gives you an explanation of those. Then the first book I wrote, Profitable Candlestick Trading, put out by Wiley and Sons, is more going back to get a better review of what the candlestick concept is. And then the third book, which is to kind of eliminate your emotions, that if you understand that each time you see a trading pattern or a signal in the right conditions, but the probabilities are greatly in your favor, you can start eliminating the emotional faux pas that most of us do in our trading. And that's where it's helped me the most. I was one of the worst investors in the world because everything I did was based on emotional trading, whereas candlestick analysis brings it all down to very basics. It's just common sense investor practices put into a graphic depiction. High profit candlestick patterns. Is the Candlestick Forum community the same as the 5-star trading plan? Oh, Candlestick Forum community. No, I think that's the website itself, or the chat rooms.